Apple is the biggest company in the world, but it is no longer just a computer company. If we break down its business, we see that it is divided into 5 main sections: iPhone, services, wearables, home and accessories, Mac, and iPad. So Apple is more and more diversified, recently getting into augmented and virtual reality in a meaningful way, and just few weeks ago releasing its own framework for building AI models. So is their size an advantage, or are they getting too big and it will start to slow them down? Well, let's analyze Apple to find out, and let's value it to see how fast it would have to grow in the future to make it a good investment at the current price. If we look at the recent results, we see that revenue is down by 2.8% year over year, net income is also down by 2.5%, cash is up by 26.7%, and the debt is down by 3.7%. So the short-term results are not that good, but investing is all about the long term. So let's take a look at that. If you were to invest $1,000 into Apple 10 years ago, you could buy around 51 shares. And today, they would be worth close to $9,981. But what about dividends? Well, through the 10 years, you would receive $364 as dividends. So if we add the current value of shares and the dividends, we get $10,345. So that is a gain of 934.5% in 10 years. I have to say, I regret not buying Apple few years earlier. But we are right here and right now, and the future does not have to look like the past. So let's just look at the numbers. Individual insiders, that is an X, less than 0.1% of the company is owned by individual insiders, and we would like to see this number over 2%. But what is worth noting is that every member of the board has some shares of the company. So it is a good sign that the board and part of the management has its skin in the game, even if we would like to see a bigger percentage. And are individual insiders buying? That is an X. We see only sale transactions in the recent quarters. And do super investors own this company? That is a check. There are 14 super investors that put their money into this company. And among them, we see Warren Buffett, for whom it is just over 50% of his US portfolio. We also see David Rolfe and Li Lu, and for both of them, Apple makes up over 7% of the portfolio. And are individual insiders buying right now? That is an X. In the last quarter, they bought almost 61,000 shares and sold over 735,000 shares. So they are selling a lot of shares recently. But cloning other investors without understanding the business or without forming our own opinions may lead to some very painful mistakes. So now, let's look at the fundamentals. Return on invested capital. That is a check at 29% 10-year median returns. And we want to see this number higher than 10%. Such high return tells us that the management is doing a really good job. So that is nice. And free cash flow growth? That is an X at 8.1% 10-year compound annual growth rate. And also here we want to see this number over 10%. So the growth of Apple is not exceptional, but we are looking at the biggest company in the world. So maybe we should take that into consideration. And what do we know about net profit margin? It is a check at 25.6%, and the industry average is 16.9%, so they have quite a lot of pricing power. This shows that Apple has a pretty decent moat around its business. And now let's take a look at share buyback. It is a check with 36.1% of shares bought back in the last 10 years. That is very impressive. Long-term investors own a bigger portion of the company without investing more money, so that is a big plus. And let's take a look at the debt. It is a check. It would take just 1 year to pay the long-term debt with a current free cash flow. So Apple does not have any problems with debt. The dividend yield is 0.5%, so in the last 12 months, shareholders got 96 cents per every share through dividends. That is not a big yield, but looking at the results of the stock in the last 10 years, it is more like a cherry on top. And the payout ratio? That is an X at 15.4%. And we want to see it somewhere between 20 and 50%. So this dividend is very safe and stable. But if you want to concentrate your style of investing on dividends, you could expect to get a slightly bigger part of the earnings. And what do we know about dividend growth? It is a check at 6.2% 5-year growth rate. And we can see that Apple used to pay a dividend in the 90s, but then got into some serious trouble, and after it bounced back, the dividend reappeared. And since 2012, it is growing every year. Price to earnings ratio is 31.9, so that is rather high. But to properly value it, we will have to estimate the growth of Apple for the next 10 years, and we will make 3 scenarios: low, medium, and a high one. So in the low scenario, we will estimate a growth of 7% for the first 5 years and then 5%. In the medium, 9% and then 8%. And in the high scenario, 11% for the first 5 years and then 9% growth. Now, why did I use such estimates? Well, annual growth of IT hardware market till 2028 is predicted to be around 7.9%. And if we look at the 10-year annual growth rate of Apple itself, we see that the revenue went up by 8.4%, free cash flow by 8.1%, and earnings per share by 15.7%. So all scenarios seem pretty reasonable and not too optimistic. Of course, if you have a different view, then please let me know in the comments what growth rates do you think are more probable. But with such estimates, the intrinsic value in the low scenario is $106, in the medium scenario $127, and in the high scenario $142. But these are not the prices we should be looking for, because we have to always add a margin of safety. I use a 30% one. So with such a margin, we get in the low scenario $74, in the medium $89, and in the high one $100. And the current price is around $195. So it is all in the red. Apple is rather expensive right now. So we have the biggest company in the world that is still growing pretty nicely, that has great return on invested capital, beautiful margins, and very little debt. But of course, if we want to own a great company, we have to pay extra. And I believe that all those great things are reflected in the current price. And if you found this video interesting, you may want to check out my analysis of another incredible company called Visa. Thank you so much for watching and see you in the next one.